Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, yesterday it felt like it was really, it really was this seesaw throughout yesterday's session. You had pressure, then you had this comeback. Then it was like, which way do we go? And ultimately we finished mixed. Now it seems like markets are more focused on, I guess the things that could lend itself towards being more optimistic, especially some of the takeaways from Scott Bessent speaking yesterday to CNBC and reporters as well after that. What's your take on where things stand, especially when you take into account Bessent commentary?
Yeah, Diane, I mean, yesterday, if you're kind of looking at it, the intraday volatility is still relatively high. And in fact, we're seeing more realized vol than what's being implied in the VIX complex, if you will. And that usually doesn't last for too long. Usually the VIX is really kind of pricing in implied volatility around 60% of the time it actually comes in when it comes to realized vol. But yes, there's a lot of angst in this market for now. We did start off pretty strong. We even talked about that technical structure. We did see a broadening out of the market. We were exceeding or advancing above that 20-day moving average for the E-mini S&P 500 futures, and that was going to be the key for us to really try to recapture new all-time highs. Yesterday, we closed slightly below that level. Now today, we're pretty much trying to test that and try to break up higher here. So I think this is still a consolidation range that has now been defined, and let's see how we're going to be able to fare here as we continue to have earnings season kind of ramp up, and then we still have some headwinds when it comes to the China trade talks as well as the government shutdown. But overall, when you're looking at the internals from yesterday, it actually looked a lot better with the broadening out. But once again, the headline price action just did not seem like it was trying to, that we basically still have a battle on our hands. We don't know if this is actually a little bit of a flag pattern until we actually continue the downside move, or if it was, once again, a little bit of a pullback and we try to recapture all-time highs. I still think the favorability is still in the bulls' court, though, right now.
Okay, it seems that way, especially given, the price action that we're seeing in the pre-market, and it looks like the chase is on for records still. But it also, kind of reminds me of at the beginning of this month, you said expect there to be some volatility, and it certainly looks that way more this month than we saw in September. Let's talk a little bit about the shutdown. So the latest effort to get a bill across the table, not achieved. The Treasury Secretary also warning that the shutdown could cost up to $15 billion a day. In terms of how long this will last, you've got the odds increasing now. When I look at Kalshi, more than a month is the expectation. How should we interpret this, and how are investors reading through this?
I think investors right now are still holding up when it comes to the government shutdown. I mean, the core services are still being implemented at this point in time. And unfortunately, we will see some jobs being furloughed as well as those getting laid off. But it has not really trickled into the economy as of yet. Now, the Philadelphia Fed did actually mention the shutdown within the Beige Book yesterday, warning that if we do see a prolonged shutdown, obviously we'll have economic impacts. Scott Bessent is also saying the same here. And yesterday, we did see the Senate actually vote for the 9th time to try to fund the government, but we are unable to actually pass that particular bill here. And so Kalshi, as you kind of talked about, is actually now pricing in. This could potentially be the longest shutdown that we've had in history. And that will, once again, could have an impact on the equity markets. This time this time around in Trump 1.0, we had a shutdown for about 35 days or so. We already had a pullback going into that shutdown. We actually did see equity markets rising to the upside until we actually had a deal, and that's where we started seeing a little bit of a pullback. So I don't think the market's really concerned about it yet. And when we do see that concern, that will probably be reflected in bond yields moving to the upside, dollar moving a little bit lower, equity market volatility still being elevated. At least one of those three factors right now still seem like the market's kind of shrugging it off, and that's the yield complex, which we're still sitting at around 4% for the 10-year Treasury.
Okay, let's talk a little bit about earnings. We got earnings from Taiwan Semi, did better than expected. I mean, earnings growth more than 30%, revenue 30%. I guess catch people up on some of your takeaways here.
Yeah, we're seeing the shares up about 1.9%. Now, one thing about Taiwan Semi, we do get those, frequency numbers, especially on a monthly basis when it comes to revenue. So we can kind of pinpoint it, similar to Costco's earnings, if you will. Revenue came in at $33.01 billion. Street was looking for $31.5 billion. Like you said, around a 30% increase on a year-over-year basis. Adjusted earnings per share coming in at $2.92. She was looking for $2.59. And they did actually re-rate their revenue guidance higher moving forward as well. well. They're looking for revenue to basically increase to the mid 30% range. Previously, that was at the lower end at that around that 30% mark, and they did increase their capex floor to $40 billion here. That previously that was at $38 billion. So it just shows that they are trying to expand capacity. A lot of this revenue is being driven by not only Nvidia but also Apple. So you are seeing this refresh cycle taking place. It seems like Apple is really trying to expand the production when it comes to the new iPhones that already have hit the market, and that is actually going to be a tailwind for Taiwan Semi as well. The consumer devices, if you will, actually provide a wider margin or a larger margin than the GPUs. It's just how it's kind of structured at this point in time. So if they actually do see a decent smartphone refresh cycle, that could actually be a massive tailwind for them when it comes to the profitability of this company. Once again, we're seeing the shares up around 1%, 1.2% right now in pre-market trading, and it seems like it's also carrying a lot of the other semiconductor names that are out there, the Nvidias of the world, AMDs, and so forth.
Let's talk a little bit about a company that was expected to perform better this year, but in terms of how their shares have performed, they haven't, but they're moving higher in the pre-market. Salesforce, after updating their forecast. What's your take here?
Yeah, we are seeing the shares higher here. They did actually update their revenue target for greater than $60 billion in fiscal year 2030. Previously, that was sitting at around $58.3 billion. That's what the analyst consensus was at that point in time. This also excludes the $8 billion acquisition of Informatica here. And so they're optimistic that not only will there be demand for their product offerings, but they're also going to be potentially able to expand margins as well. I think that's another reason why you're seeing a tailwind in the stock, at least for this morning. We have seen revenue growth, but it's been pretty much sub 10%. Market really wants to see that in the mid teens, if you will. That's really where you get a lot of optimism for this name. And Mark Benioff actually kind of downplayed the fact that AI is going to fully automate software development. He's a believer of that. I think others kind of think differently. If you kind of look at some of the products that are out there, Grok, ChatGPT, that are doing a pretty decent job when it comes to coding, but Mark Benioff once again kind of feels like we're still going to have a human element here, and that's going to benefit their business over the long term. So a nice pop in shares this morning. Let's see if it's going to be able to hold here, Diane. This has been a stock that has had a lot of headwinds when it comes to investor pressure as well as their guidance as well. They usually provide a decent guide, and then they retract that guide or re-rate that to the downside as we get quarterly earnings.
Okay, and KG, let's get your targets for the S&P 500 today, to the up and the downside.
Yeah, to the upside, 67.45. To the downside, 6,600. We're implying around a 1.25% move in the VIX complex right now. We break 6,600. That's when we have a little bit of trouble here for the S&P 500, and the bears probably can try to step in and knock this down a little bit more.
All right, that is Kevin Green, senior markets correspondent here on Schwab Network. Thank you, KG.